Now welcome to this video, which will be on gold, and I've already got 4 videos on previous signals that I've given in the past. I've had a few people who've actually contacted me saying that I haven't put anything on YouTube recently. I think the last video I did, I only got about 400 views, which I thought, well, if nobody's particularly interested, then I won't bother. But anyway, for them, I've decided to stick this on. Okay, so in the last video, which was part 4 on the gold series, and if I remember I'll put a link on to watch those, we left it looking like this, and I explained how originally I got the master time factor wrong for the angles, although it did work. It was working in a slightly different way, and the last signal I gave, that I showed you, was that I gave a short on gold here. Now you've got to remember that pretty much everybody is actually bullish of gold. Okay, and all the way through here I've been saying it's going down, because it's not that I disagree with the fundamentals behind the whole thing, because I think it makes perfect sense. You know, they're creating all these dollars out of nothing. Real money is gold and silver. Makes perfect sense. The problem is the markets don't work that way. People go and say that it's all being manipulated, and I have absolutely no doubt it is being manipulated, but it doesn't matter if it's being manipulated or not. It's all about making money, of course. Anyway, what we did, I'll just kind of summarise, unless you want to go back and watch the previous video. I showed you the following angles. Now, the first angle I'm going to put on is what basically Gann said, and Gann said his most important angle was a 1 by 1. Now, that statement by Gann is a complete and utter load of rubbish, especially in today's markets, because things, you know, when Gann was around, were trading in the dollars. Now they're trading in the you know, $500–600, and so an angle that goes at one time period per unit of price, in this case on gold, is very flat. It's a pointless angle. Then what you'll get is a lot of so-called Gann experts will start doing strange and weird and wonderful things to find the true 45-degree angle, and you'll find some videos on my YouTube channel kind of basically saying that that isn't true. However, we'll start with that. Next one would be a 2 according to Gann. The next one would be a 4. The next one would be an 8. And that's where we left it, and I showed you that it was exactly where the market went and stopped. Next one is 16. Now, although it looks like it didn't work, these are weekly prices, and in fact, if you actually look at it more closely on a daily chart, it actually hit it and did go up in that week and then came shooting back down again. Next one would be 32. So all we're doing is multiplying the last number to get the next one in the series. And as I keep telling you, I cut the angle when it gets broken by the price. So in this case, I would cut it here. If you don't, okay, you start seeing all weird and wonderful things that aren't really happening, and your brain is attracted to where it works. So what you'll do is you'll see it give that top there, and you'll see it give that top there, but with hindsight you ignore that. You ignore that low. You'd see that because it's worked. You would ignore that. You'd ignore that, and that. Okay. It's incredibly simple to fit things in to see what you want to see. Okay. So don't cut it. Okay. There are other ways of finding these tops and bottoms. Okay. I would cut the 16 when it got broken, and I will cut the 8 when it gets broken. Okay. Now, halfway between these numbers, we'll start with this one, 8 and 16 would be 12. And you can see, as I showed you in the previous video, it's exactly where the market stopped. Twice 12 is halfway between 32 and 16, which is 24. And I showed you that it eventually got to it here. It didn't get to it here. It got to it here, here, and then it broke through. I would cut the line there. Okay. And then halfway between, and then these are not, this is my research, halfway between 16 and 24 is 20, and that gives us the next low that was made on gold. That's not a Gann thing. Okay. Halfway between 12 and 8 is 10, which of course is half 20. Now when it gets there, it just goes straight through the angle and shows absolutely no resistance. Okay. Now the next one would be halfway between this one and this one, and it's not a very important number, but it tells you mathematically why it stops. And obviously halfway between 8 and 10 is 9, and 9 is exactly where the market goes and stops here. I'll make that a week line. Again, it's probably not what I'm going to trade unless I've got some really good reasons. A really good reason would be if twice that number had worked, which would be 18. But you can see that when it got there, it just went straight through. So I had no special reason to say that's going to work, because if you keep taking halfway between halfway, you can always fit something in somewhere. Okay. But basically it shows you that it's just mathematics, and the whole thing is mathematical. Halfway between 8 and 4 is 6. Now I'm going to insert a video here that I did back in 2003, which is the basic training videos that clients get, explaining when you should stop drawing angles and when you should draw angles. Okay, so just to prove that I'm not making this up as we go along. Also, you need to know when to stop drawing angles as well. You can draw angles far too steep and far too flat in an attempt to try and fit things in. You've really got to prioritise your lows. So basically, the lowest one here that we can see is our most important one, which is number 1. And this one here is our second most important one, because it's second highest. And the next major low is this one here, which is our third most important one. So from the major low, I would draw my angles, and I've already drawn them on, so you can see where they all are. But again, as it trades up here, it then gets broken here, so I would cut the line, and the next angle below that one is this one here. Again, that would be on here before, but once it got broken, which was here, I would cut the line. The next one never gets broken, so that would be going off into the future, and the one that's flatter I can do, which is down here, and the next one, which is down here. Now after about that, I haven't got a particular rule for it, but I don't really want to do any flatter, because they just get closer and closer and closer as you keep dividing that number by, multiplying that number by 2, so 16, 32, etc. Now from the next low, to draw the steeper ones, I have to draw them from this low, otherwise I'd have to break it. So the market goes up, it then gets broken there, so I would cut the line there. The next low was here, so I would cut it when it got broken, which was here. Now you can see on here I've drawn some flatter angles. Now I wouldn't do that. The most important low is this one back here, the number 1. So the most important angles are drawn from there. I don't draw that one. I wouldn't have it on. It's flatter than the more important one, which is from the low 1. So I wouldn't have that one on, and I wouldn't have any flatter ones on than that low. And the same thing applies from the next low that we have. You can see that I've drawn some quite flat ones there, the 1x8, 1x4, 1x2. So I would draw that one there, it got broken there, so I'd cut it. I'd draw the next one, which got broken there, so I'd cut it. I'd draw the next one, which it hasn't broken yet, so that's going off into the future. The next one is actually the same gradient, sorry, is flatter, should I say, than this one over here. If you can imagine, say we had an angle from this low here and it hit an angle there that goes through that low there, you can see that this one here is flatter. Yeah, this one here is flatter, so from this low here, so I wouldn't actually draw that one, or the one that's flatter, or the one that's flatter. So don't draw them too flat from the secondary lows. They've got to be steeper than your previous major low. Hope that makes sense. The same thing applies exactly the same on the way down. You turn that graph upside down basically. Now hopefully that video makes sense. Okay, so what we're going to do is we're going to draw angles from the correct place back here, and it looks to me like it's going to be about there. Now with the program, you can ask it what the closest angle is between 2 points. So if I go to that major low that I can see with hindsight, then we get this list here. Okay, and it says the closest one is a 13 by 2 gamma. okay, which it says 13, so that means that it's based on the odd number of 13. So here 16 is based on the odd number of 1, because if you keep dividing it by 2 eventually it gets a 1. 12 is based on the odd number of 3, because if you keep dividing it by 2 it eventually gets a 3 before you get a decimal place in the number. Anyway, if we stick that on, then what we've got in effect is a very obvious trend line. Okay, so I would never dream of buying on this one. Okay, so in that video I said that you should stop drawing angles when they go below angles from a previous major low, and you can see that that 6 by 1 actually went below the 13 by 2, this one that goes through this low, and so as of that point I would take off those angles from this low down here. They have no interest for me whatsoever, and the ones that are flatter than 13 by 2 I can draw from here. So a base 1 angle below that would be a 4 by 1. Okay, so I can draw that one for the future. But if I did an 8 by 1 from that same low, can you see that it's in a completely different position to the 8 by 1 drawn from this low? In fact, that 8 by 1 I would cut there. Okay, so as I said, it's incredibly important you draw angles from the right place. Halfway between 8 and 4, two base 1 angles, is going to be a 6, which is a base 3 angle. Okay, if I drew it from that low which I had on before, you can see they're in completely different positions. Okay, so very important. 13 by 2 is halfway between 6 and, well, the number below 8 is 7, and I'll just make that there a weak line. So the 7 by 1, 6 by 1, add the two together, you get a 13 by 2, and that's where that number comes from. Okay, the next number below a 6 would be a 5. Okay, the minor angle would be halfway between these two, which would be an 11 by 2. Again, I would make that a weak line. And halfway between a 5 and a 4 would be a 9 by 2, and again I would make that a weak line. So those are the angles that I've been telling clients about and we've been watching for future signals. Now I've changed to a daily chart, so this is where we left the last video I did on April 2014, and as I said there was a short here in the market, did it come down, and these are the angles I've been talking about. Remember I showed you that it didn't look like the 16 had worked on the weekly chart, but on the daily chart you can see it worked, but not for very long. But again, I thought it was going to go through anyway because it was a 4th attempt, which again, if you watch probably part 3 or part 2, you probably see that. The 9 by 1, you see it just went straight through the 10 by 1, so there was just no signal. The 9 by 1 is where the market stopped and went up. The 8 by 1 is the one I showed you, and it goes up. Then we've got the next angle, which is a 7 by 1, which is halfway between 6 and 8. And if we go into the future and just see what happens. Now I wouldn't be interested in the 8 because the 8 has worked once, okay, from the major low, the second low, or the one we started doing the things from. So that's now an obvious trend line, so I wouldn't be interested, just like I wouldn't be interested here because now it's an obvious trend line on the 9. And what happens is this, market gets there and it goes through. Okay, so it's just important to know when not to do something as it is to do something. The next angle is a 7. It reaches the 7, it's exactly where the market goes up. Now I know absolutely nothing about gold whatsoever, and frankly I don't want to know anything about gold, because if you know something about it, as I said earlier, then you'd be expecting the price of gold to be going through the roof. Okay, the whole thing is completely and utterly mathematical. It has nothing to do with astrology. Okay, there's lots of things that Gann did which was all Mason based, which is a load of twaddle as well. Okay, it's just basic, simple primary school mathematics. Okay, that was Gann's great discovery, that the markets are mathematical. That doesn't mean it's easy, because it certainly isn't. Okay, sometimes it's very difficult to see things, and sometimes it's very easy. Okay, but basically you work out something works from the past on a particular item, and gold will work differently than silver, and silver will work differently than the FTSE, and the FTSE will work differently than the Dow. Okay, the S&P will even work differently to the Dow, but you've got to find out how it works in time to make profits in the future. So these angles I've put on for the future, okay, are based on things that I've done in the past. Okay, and the more information you get, the better and easier it becomes. Okay, and we'll look at that probably near the end when I show you where I think it might go down to. So the market goes up. Now this here is the 13 by 2. That was that really obvious trend line that went through the major low that I did these percentages from, these angles from. If I click on that 8 by 1, all angles I draw from now would be drawn from the first place we started drawing angles from. So, okay, if I click on the 7, okay, it's still the same circle, but I know that the 13 by 2 was an obvious trend line through the major low where I did the first set of angles from. So if I click on that now, any angle I draw will be drawn from the secondary low that we started using. If I click on that one with the software, then and do a 13 by 2, can you see, well, they're very close, but it might be that one. Yeah. Anyway, that's a trend line. Okay, it's an incredibly obvious trend line, so I wouldn't be interested in buying on that one. Anyway, the market comes shooting down, it gets the 13 by 2, I'm not interested because it's a trend line, and it just went straight through anyway. Okay, so I wasn't interested. If you want to know mathematically why it stopped there, and again this is more hindsight than I would have known at the time, but that's a 13 by 2, that's a 6 by 1. What's halfway between a 13 by 2 and a 6 by 1? It's going to be a 19 by 3. And if you do a 19 by 3, can you see, is exactly where the market stops. But again, if you keep dividing by between two angles, eventually you'll find anything. But notice it's not physically halfway, and that's why all this is so incredibly clever. But it's all mathematical. The next angle that we'd be interested in would be the 6 by 1. I can't remember if I gave a signal on it. I don't think I did. In fact, I'm pretty sure I didn't, because I've just gone through my focus signals. Now it took a bit of time to get there, but you'll see that when it gets there, it just goes straight through and collapses down to the next angle, which is the 11 by 2. So what I'll do here is I'll put in what I said before it got to the 11 by 2, saying that I thought it was a buy. What also is absolutely amazing, if you picked up my chart, you'll see that I've got some angles on, and I've got a 5 by 1 on and a 6 by 1 on from a major low, and halfway between a 5 by 1 and a 6 by 1 is an 11 by 2. Where did it stop? Exactly. It fell exactly to the 11 by 2 that I've got from a major low. It also fell 12.5%, and from this high here. So you can see that it's having a bounce. Do I think it's a buy? Short term, maybe. So that's what I said on the 21st of July, saying that I thought it was a short-term buy, because from a longish point of view, I still think there's a major level. In fact, I still think there's a major level lower than where the market is, but we'll probably look at that a little bit later on. Now, most people would be shorting because of this massive movement down, thinking, they've got to get in on the action. So let's see what happens. So I said it was a short-term buying opportunity. Market actually comes down, goes back up again, goes down. Now this is the difference between making money and losing money. It all depends where you put your stop loss. Next day it goes back up again, but that movement might have stopped you out. Then the market goes sideways, comes back down to the angle again, very frustrating, and then it starts to rise. So as I said, I thought it was a short-term buying opportunity. All the people who shorted it because of this, and you can pretty much guarantee there'd be some silly fundamental news that would have come up to encourage people to short it, but you can see I was right. Was it a short-term buying opportunity? Yes, it was. Did it last? And the answer is no, it didn't. So I was pretty much right. And then it starts to go back up again. Now, the next signal I gave, because I'm going to put them all on, I'm just putting out the ones that have worked, was on the 14th of October. So it was actually when the market was actually here. So what I'll do is I'll insert what I was looking for. That's his Comet's gold. Let's go with a training video of the 14th of the 10th, 2015. And we've already got a focus signal from, when is it? From February for a possible buy, a major buy if you can get down to this level here. And as described in the last video, I'm looking for a possible short round about this angle and these levels as discussed. If you want to pick up my chart, it's CO 500 by GS. So that's what I said on the 14th, I think it was, of October, and I said I was looking for it to reach this level and this angle coming down. Now the angles coming down from the high on gold have been incredibly hard, and I think it kind of works but breaks it by a bit or doesn't quite get there. And then recently I found out how it worked, but it did take me a long time, and it's all based on what works in the past, and by working out what works in the past you can work out hopefully what's going to work into the future. But what I was waiting for was to reach the level and to reach the angle at the same time. Now because angles travel in time and price, to get to this angle and that level it would have to take a bit of time to get there for that angle to come down a bit. Now this is what actually happened. The next day it went shooting up, so it was looking good. The next day it went up, but it didn't get there, and then that was where it topped out and started to come down. The important thing is that I was looking to short the market, I wasn't looking to buy it. And then the market collapses, and you can see that we've got the next angle just below us here. And on this day here, this one here, I basically said that I thought it was a buying opportunity at this level and this level here. So what I'll do is I'll stick in that that signal from the 11th, oh sorry, from the 30th of the 11th, 2015. Now it's Comet's gold, and let's go with the training video of the 30th of 11th, 2015. And as discussed in there, I'm still watching this major level here for possible long-term buy, but we might get a buying opportunity here as well. If you want to pick up my chart, it'll be CO 500 by GS. So let's see what happened. Now this angle here, if you go back to the beginning of the video, you'll see that I drew it from a completely different place to the previous low, and if I wouldn't have done that, I wouldn't have got this low, and I wouldn't have got this low. So obviously what I said is the right thing to do. Anyway, market goes up, comes down, it's not got there yet, comes down, hasn't got there yet, goes shooting up, goes up, comes down, comes up, then it comes shooting down, and we've now reached the angle. And then the market goes up. And we've had this massive rise in the price of gold since. Now I said to you that this was working on a really strange set of angles coming down from the high, because if you do the next angle, it's this one. If you do the next one, it's there, and they're not working. So I actually worked out how it was working on this day here, the day it topped out here, and I said that was probably the top, and it did actually stop there for quite a long time. So let's look at what I said on that day. means is that we are at a critical level now. 53 by 4, 53 by 5, 53, yeah. Now that's an extract from the video that I did, what was it, on the 12th of February 2016, and you can see that gold was going through the roof. It just had this massive rise. Now I did it the day after, but that is actually when I found out how it was working, and it is pretty unbelievable. And as I said before, it's all about working out what works in the past to work out what's going to work into the future, unless of course it just works on your normal numbers that I would normally use, which from the low has been really simple, but from the high it's been incredibly difficult. So let's see what happened. The market went shooting down. Most people would be jumping into gold at this stage because of the big movement. Then it goes down again, then it goes shooting up, then it comes down, then it goes shooting up, then it comes down. So you know, we're getting into about 3 weeks now, and then it breaks through. And I've now got a prediction for the future, which I'll do in a later video. But you can see how incredible angles can be. The interesting thing about these numbers you see here, they're still using exactly the same master time factor as we're using from the low. So the master time factor is what time period we're actually using. But now if we zoom in a little bit closer, you can also do angles from lows to get turning points. So this is a low, and remember the rule that we did at the beginning where I showed you when to stop drawing angles, and that's the first one. That's what I call a base 5 percentage, and then I'd have to draw this. I can't, if I did twice that for example, I'd have to cut, I'd have to cut that line when the market breaks through it. Now no one else who does GAN does that, but I would then have to draw the steeper ones from that low, and the closest major one is this one. That's based on the odd number of 1, an important number, and then the next base 1 number would be 64, and the next one would be 128. The problem is that this one has actually broken the angle, so I would have to cut that one, but there's no point in keeping it on. Now halfway between 32 and 24 is what I call the base 3 angles, so you'd have a 48, and twice 48 is 96. Now that one I would have to cut when it got broken, which was by the price, which was actually here. Now what's halfway between 96 and 64? Well, it's 80. It's twice, well, it's a multiple of 20. So if you put 80 on, you can actually see that the market hit it there. Now to draw the steeper angles, I have to draw them from that point there. In fact, I would actually, because you can see the 80 got broken very slightly, I'd actually draw the 80 from here. So it would look more like that. Now, you can 96 is the number that's above 80, and if you do 96, you can see that it's exactly intraday where the market went and stopped there. That's a base 3 angle. Multiples of 32, 64, the next one's 128, so the one that's above that one, base 1, is 128. And you can see that the first reaction was made there, and it's exactly where the market goes and stops there. Now what's halfway between 128 and 96? Add the two together, divide by 2, you get 112, which is exactly where the market goes and stops there. So you can see that it works for finding smaller movements. But the point is, it's very difficult making money that way because you don't know when to get out of the market. If you follow our stop loss rules, say, just for instance, let's say that you did buy down here or down here, like I showed you earlier on. This is what we call a trend indicator line, and basically what happens is your stop losses go below where the line goes from red to green. So on that day, you'd have a stop loss below that low. So I don't know, let's say using 0.25 say as a stop loss, 0.25% below that low. The market goes shooting up, the market then comes shooting down and then goes up for a day. So you'd then move your stop loss where it goes from red to green from there. So your stop loss would then go below that low. It then goes from red to green, so you'd move your stop loss to that low. Then it goes from red to green, so you'd move your stop loss from right down there to here. Then it goes up for 1, 2, 3, 4, 5, 6, 7 days, and I would actually move my stop loss below there, and I would probably, depending on what stop loss I was using, I would probably have been stop lossed out there. However, if you didn't use Gann's 7 to 10 day rule, then your stop loss would then move below that low there. It would then move below that low there, and this is the most important thing in trading. When you get a good trade, you've got to stay in the good trade. So once I make a trade, I just follow Gann's stop loss rule. So you can see we've gone from red to green, we then moved to stop loss to there, we've gone to red to green, and the stop loss would have moved on this day to here, and that's where you would definitely be stop lossed out. Now what I've just done is I've actually put on today's high and low, and that's the next angle. Can you see it's exactly where it stopped today? That's the opening price, that's the current price. So I'd be out of a long position. There's a level that I'm looking to short at which looks pretty good based on these angles coming down from the high, and you'll keep seeing on the previous things I've said in this video where there's a major level in the future where I'm looking for a long-term buy if it gets there. So I'm never kind of bullish or bearish. I just go and say mathematically this is a place to buy if it gets there, this is a mathematical place to short if it gets there. I don't go and say gold is a long-term buy or a short-term buy, because I'm not God and I don't know. But what I do know is that the markets are completely and utterly mathematical, and if this doesn't prove it to you, then nothing will. I hope you enjoyed it, and if you'd like more information about our services, then you can contact me at Gary1r@gann2ns.co.uk.